If 2018 was supposed to be the year of Bitcoin, 2019 was supposed to be the year of pot stocks. Dozens of cannabis companies enticed investors to get in early on the burgeoning industry that many predicted could someday be as big as the alcohol industry. But much like the hype and subsequent crash of Bitcoin in 2018, in the latter 6 months of 2019, many pot stocks lost over 50% of their market caps. Big names like Tilray and Aurora Cannabis were down over 60% from June through December, and the Canadian Marijuana Index, which tracks some of the biggest pot stocks, was down almost 80% since last year. There were a couple big reasons why pot stocks went up in smoke last year. Cannabis was federally legalized in Canada in 2018, but many of the biggest Canadian pot companies struggled to gauge demand and product mix amid a slow rollout of retail stores in Canada. That resulted in huge earnings misses among some of the biggest names in the market. In the US, where cannabis is still federally illegal, companies struggled under the weight of hefty tax burdens and a regulatory climate that exacerbated their cash burn. And a vaping crisis last summer only added to the sell-off. As many of these companies continued to miss earnings, investors realized their fundamentals didn't match up with their high valuations and discounted them accordingly. In 2020, pot companies will have to start showing some growth, as revenue misses likely won't fly with investors this year. However, plenty of analysts and investors still see huge potential for the cannabis industry moving forward. But as many companies lost significant value in cash last year, it's likely many won't survive.